Hello, everybody. This is Kevin Gormley with Leading Edge Financial Planning. Today, and over the next few videos, we're going to talk about real estate investing. Specifically, we're calling this the Pilot's Guide to Real Estate Investing. Many pilots and spouses have talked to us in the past about real estate investing. And as a tax CPA, but also as someone who tries to help clients build wealth, I think real estate investing is absolutely something that should be on your cross-check if you are a pilot. I also think there's a lot of misrepresentation, misunderstanding about some of the tax benefits and drawbacks of real estate investing. But really, let's start today with just the reasons why pilots have told us in the past that they want to get into real estate investing. So this is by no means a survey or official data. This is us, Charlie, myself, Andy, and others, just talking about what pilots tell us and what they say the reasons why they want to invest in real estate. So probably the number one reason why pilots want to invest in real estate is that they want to save on taxes. Specifically, they've heard that real estate investing, they can save on taxes. Okay, so we are going to come back to this tax benefit, and real estate is tax preferenced. No doubt about it. It's definitely tax preferenced, but the tax preference really, we think, really helps in getting risk-adjusted, tax-adjusted returns. That's really what it's all about, is putting money in your pocket. So, but the number one reason is saving on taxes. Number two reason why we hear from pilots is passive income. It used to be called mailbox income, and I don't know, we don't have mailbox income anymore, mailbox money. On HGTV in the past, there was a gentleman who used to rehab apartments, sometimes in the basement. It was in the Chicago, Illinois area. And then at the end, he would say, all you have to do now is go to the mailbox and collect the checks. So passive income. And we'll talk about the three different types of passive. There's passive, then there's passive, and then there's passive for tax. And we'll talk about those three areas around passive income. The real question, though, I think, is how little work do you have to do to be able to make it in real estate investing? Is it truly a passive, just go to the mailbox? Is there more to it? We all know that most of the time there's more to it, but we're going to discuss that idea of passive in three different ways. The next one is, and it's amazing how many times this has been said to us. I know I really should be, doing real estate. And we're like, oh, okay, tell us more. Well, I've talked to a number of people. I know that, I'm investing in my 401k, putting money in the backdoor Roth, putting money in a brokerage account, paying down debt, saving for college. And I know I should be investing in real estate. So there's lots of discussion out there from people, especially that are in real estate, that you as a pilot or pilot family should be investing in real estate. And we'll talk a little bit about that. The fourth reason, and this is a really small subset of our clients, but they say, I really love real estate. I love the process of buying and selling. And I love the fact that you can touch, it's a tangible property. You can touch it, you can see it. You can create something of beauty with people that like to do interior design. There are a subset of pilots and spouses that really love to invest in real estate. And again, that could be part of the reason why you invest in real estate. And I get that. So the fifth reason why pilots and their spouses tell us they want to invest in real estate is to make money. To make money. Yeah. So this to me is the number one reason why we at Leading Edge Financial Planning feel like if you want to go down this path, this is the best reason to do it, is to make money. This is the goal. So when you think about investing, how would you define investing? There's lots of different ways to define investing, but really what it's about is taking your money, your capital, and not spending it, but putting it into some business venture so you can get a return on your money so you can potentially spend more later. That's not a direct definition, I know. We can put on a direct definition on the screen right here about what the CFA Society says about investing. But really, the reason why most everyone, and I'll use the word should, although nobody likes to be should on, but I use the word should. The reason why people should invest in real estate, if that's what you want to do, is to get a good risk-adjusted return and it also has a tax preference to it. So we think this is a great reason if this is your motivation to make money. Okay. All the reasons are valid, as I said. 2 and 5, passive income and making money are probably, to me, the most valid. But, I can't say for sure that they would be your exact reasons all the time to invest money. I mean, the second thing about making money, however, is it's not just about what can you make in real estate. It's what's the opportunity cost if you use that capital and you invest it in real estate. Now, if you end up making a boatload of money, who cares about opportunity cost? Who cares about what you could get out there? But one of the concepts you first learn when you go into investment theory is that there's a risk-adjusted return. Okay, if I do absolutely nothing, I'm guaranteed my money back in 90 days, also known as a 90-day T-bill. What is the return on my investment? And in the last year, when risk-adjusted rates went up above 5%, I think even 5.5, I don't know if they went all the way to 5.6, but somewhere around the 5.5 range, by doing absolutely no risk, having your capital fully liquid 90 days, you got a risk-adjusted return of 5.5%. So that means that you want to get a higher return than that. So what are the returns in rental real estate investing? I did do a pretty exhaustive search. One of the best studies, which I'll link to and put it in the show notes here or the video description, is around the fact that it was about 8.6% were returns over the long run. And depending on the city you were in, some cities had higher returns than others. What was this return made of? If you're going to make money, you want to know what kind of money am I going to make? Well, with rental real estate, you collect rents, you buy the property, you put it on the market, you collect rents, and then eventually you sell it. So it's going to be an income source as well as hopefully a capital gain source. So they looked at a lot of data and they found that about 8.6% was the average return on rental real estate. Now, I've seen other articles, sources, they say 8 to 12%. There's possibilities of making more than that. But if you're going to go into this for making money, think a little bit about what's your expected return, what are the other investments I could do? And then if you decide that rental real estate is what you want to do, then that's fantastic. Some investment people say that rental real estate is a diversifier. Some say it's not a great diversifier. I kind of lean towards it being a good diversifier. I mean, you don't have all your money in the stock market. You don't have all your money in your personal house. But again, how diversified is it? It's not that diversified because it's one property in one place. Okay, so let's talk now about from making money. Let's talk about taking the plunge. So this was a shocking statistic. I'm shocked if this is true. Again, you never know with statistics if they're true or not, but Bigger Pockets came out with a blog and they said 95% of all real estate investors never buy a property. Okay, so the first expected return that you can have is after you actually buy a property, you have an ability to make an expected return. So a lot of people that go down this path of real estate investing, and maybe this is when people say that they really know they should be doing it. Maybe they have explored a little bit about doing real estate investing, but a lot of people don't ever pull the trigger and start investing. And I think there's multiple reasons for that. Number one might be a lack of money. Number two might be that it's a big purchase. And so I actually looked into buying real estate a number of years ago, and I shadowed somebody for a couple months, and we went and looked at properties. And it's you're going to buy a property. It's not just kicking tires. You have to see the foundation. You have to see everything else. It's a big amount of money. You remember that feeling the first time you signed and bought a house? Well, that's what happens here. Is that you have to go through the process of buying a property. It's a big purchase. So I think that's part of the reason why a lot of people don't actually move forward and actually buy the property. The risk. Okay. So what is the risk in a real estate investment? Okay. You want to make money, but what's the risk? That's always important. A risk adjusted return. Sometimes it's kind of hard to know what the risks are. If you do market research and you find out that supply and demand, well, there's a lot more supply that's come on the market. Here in Knoxville, Tennessee, there's apartment buildings going up all over the place in West Knoxville. So we see all these properties going up and you're looking at buying a 3-bedroom house, that's going to be your competition. So sometimes it's hard to know exactly what the supply and demand is in a local market. It's a little bit more difficult, I think, to get those statistics on longer term rentals, but maybe someone can share in the comments below that there is ways to get this data. So there's risk in it. There's also work. So this whole idea of passive income, how passive is passive? Well, if you want to go into rental real estate, I would say go into the rental real estate business. Become a business person. Maybe not a business plan, but at least have a spreadsheet that says, what's the expected amount of rent? We have this. We have this spreadsheet for you if you want a copy of it. Just email me at kevin@leadingedgeplanning.com. I'll send it to you. And we can go over the spreadsheet if you're a client. We can look at what is the potential that you're going to cash flow positive, because cash flow negativity is some of the worst negativity there is in life when you're not making money, just cash flow. Yeah, if you sell it later for a higher price than what you paid, that's good. But if you're not cash flowing and you're pulling money out of your pocket because of a rental, that's painful. But understanding the rental real estate market, understanding all the different ideas around rental real estate, it takes some work. Now, can you just say, hey, I see that property, I hear what they're renting it for, and just buy it and do well? Yeah. Absolutely. That could happen. But, we think a lot about at Leading Edge of trying to increase your probabilities of success. So looking for a unicorn is another reason why I think people can't pull the trigger. Mm-hmm. So you're looking for a sure thing. Okay. You study real estate, you understand real estate, you become an expert on it, but you haven't bought your first property yet. So you keep looking for the perfect property. And I do believe what a lot of the real estate bloggers say about, hey, go into your first property. If you want to make real estate investing a business, maybe go with a little bit less expensive property and learn from it. Just make sure that you have a good safety hatch, that if things go bad, you're able to get out of it, unwind the business if it's something that you don't like. And then the final point I have here around why people probably do not jump into real estate, although they want to make money at it, is all real estate is local. And what I mean by that is you can talk to your Uncle Louie in Toledo, Ohio, and say, hey, Uncle Louie, I know you're a real estate investor. And he says, yeah, this is what I do. This is what I do. This is what I do. That's probably not the accent of someone from Ohio. Andy, maybe you can help out with that. But your uncle tells you all the things to do, and then you go to your local market in New Jersey, and you're like, nothing is like Toledo, Ohio. So it's all local. So you actually, boots on the ground probably can help you. Or getting somebody that's a real estate professional in the area to help you probably is a good thing. Again, they might have some other biases that you have to be careful about. But anyway, making money, that's what we're talking about here. So you can make capital gains. Charlie wrote in his piece in Aero Crew News that, the old statement, I forget what that's called, but you make the money on the buy of real estate, because if you buy it at a low enough price, again, you'll be able to sell it for more. Axioms is what I think it is. But so you make money on the buy. Well, you make money on the buy and you make money on the sell over long periods of time. And we'll show a graph here that rental real estate has, or single family housing has gone up year after year, almost every year. Now there are some time periods, just like the stock market, it's less often, but where rental real estate has come down for a few years. And 2008 is the best example of that recently. So, the rental real estate cash flowing is a really important part of making money, because if it's cash flowing positive, even before depreciation, then you can feel good that you can hold out if right after you buy that rental property, markets go down. So again, thinking a little bit about how to make money in rental real estate is important. So what are some of the critical success factors if you do want to make money? Well, what are the probabilities? I would look at this as probabilities of things going wrong. What are the things that could go wrong? Well, the first is, like we talked about, a recession that actually is a real estate recession, not just a recession. Sometimes rental properties do just fine in most recessions because people are not buying, they're renting. Capital. How much capital is going to come out of your pocket versus how much are you going to borrow? The more you borrow, there's, leverage works both ways. It's very positive. And if things go good, borrowing money is great. Cash on cash return is the axiom there. But if you borrow a lot of money and it's not cash flowing appropriately because you don't have a renter for a few months, that could create some undue stress. So also understanding that there's flip and there's rental. flipping houses, buying a house and then selling it a short period of time later, you really are at risk of a real estate downturn in some way. You're also at risk of overages of costs. So you just have to know those things. Rental real estate, to me, is a little bit more forgiving if it's cash flowing positive. Again, maybe you can't sell the property for 10 years because it's not worth more than what you paid for it. But if you're cash flow positive, every single year you can continue to hold on to it as long as you don't mind it. So also flipping, if you're truly a flipper, a dealer in homes, tax code is not as beneficial. And we'll get into taxes in another video, but rental real estate really is where there's the tax benefits, many tax benefits. Anyway, for rental real estate. Flipping is something, if you're truly buying and then selling it a year later, fixing it up, not as tax preferenced, although there probably are some tax items that I'm not thinking of right now. So depreciation is fantastic, but so you just have to know about what depreciation is. If you don't know about the risks of when you sell the house 10 years after you're depreciating it, you could be in again for a surprise. There is a 25% recapture tax. And if you don't know what recapture is, good idea to learn it. Understanding cap rates. Okay, so if you go into trying to make money in real estate, a cap rate is the net operating income that you receive. So the income that you receive, and you divide that by the price that you paid for the structure and for the land. So as long as you're at a decent cap rate, and I'm not going to name cap rates here, it depends on what type of expected return you have. It depends on what type of property you have. Okay, so I think it's a great idea. And again, looking at this paper, they do show that different parts of the country have different income returns versus different capital gains. So I think it's important just to understand that dynamic. When you're making money, what kind of money are you going to make? And again, what's the risk? If you have a property, if rents are high in that area, even if too much supply comes in, what's the risk that your rent is going to be cut tremendously? It's not a lot, but we've seen with the short-term rental market that in certain areas, especially in Florida, I've heard Phoenix, although when I've gone and stayed in an Airbnb in Phoenix, it didn't seem cheap, Scottsdale actually, but there's certain parts of the country now they say are just flooded with short-term rentals. So, but having a little breathing room there, margin of success is always very important. So also, I would say to the amount of man hours that you might have to invest. Okay, so we think about investment as in dollars. The passive income again. How much investment in your time are you going to put into it? Now, many pilots tell us, I fly the regular line and I have plenty of time, and that's great. And again, if you enjoy it, that's even better. So walk a mile in the shoes. I do recommend that everyone shadows somebody, doesn't have to be all day, every day, but just shadow somebody a little bit and talks to them about their journey in investment real estate property. That's why I decided it wasn't for me after hearing some of the conversations that my friend had to have with tenants. And it was, it was not in the high dollar properties, but it still was something that I just thought I couldn't do. The other cost or risk is the temperament of an individual. So my friend that I just spoke about, when he got these calls and he would just say, nope, can't do that. Nope, I can't let you do that. No, absolutely not. You cannot allow that person to move in with you. Nope, absolutely not. And he would hang up the phone and he'd be like, hey, Kevin, let's chat. Hey, everything's good. He was just not bothered at all by those conversations. So if your temperament is bad and you're going to be doing the rentals yourself, might not be for you, might not be worth making money, might not be worth the risk. Doing credit checks, interviewing tenants. How do you know truly what's inside someone's heart, what intentions they have? You never do, but that is all a part of the money that you make. You do earn it. So what are the actual risks in owning rental property? Okay, the fact that you have to sell. So selling into a good market is a risk. Selling into a bad market, I should say. Selling right now a rental real estate that you've had for 27 and a half years, you're going to complain so much that you have to recapture all the depreciation. Oh my gosh, I have to pay taxes. But boy, if your property tripled or quadrupled in value, and I do the tax return, I'll be like, hey, awesome. great. I would pay your tax to make this kind of money. So selling into a good market is great. Selling into a bad market is not so great. So the next one is bad luck. I don't know if people believe in luck. Some people do, some people don't. I sometimes think that, if you do everything right, there's the potential of not having bad luck, but you get renters. Maybe a renter gets crazy or gets divorced, or you have major expenses. I mean, person comes over and inspects the house, everything looks good, but nope, something's wrong. So I do think that luck can play a part. The supply and demand is a risk. The short-term rentals, I think we've seen that in certain areas. Who knew that when everybody was making so much money hand over fist that all of this new supply would come on the market? The economists knew, and they said so, but it was really hard to, the fever a few years ago about getting into short-term rentals. Again, I was talking to friends about doing it again. The fever was there after COVID. So in Knoxville, Tennessee, the amount of new apartments, I've talked about this before, that have gone up is just incredible. So I do wonder if that does hurt, if you have a renter moving out, if that does hurt. So the next risk is renting to family. Okay, so when you have a rental property, you love your kids, might love your brother-in-law, but if you end up renting to them, that can be a risk of not making money. Rent to friends. See the last one, rent to family. If you become too close to your renters, this is something that Charlie has written about in his article in Aero Crew News, that if you become too close to your renters, you don't want to raise the rent. You know that little Joey just got braces, and this and that, and you're just a good person. And that's a risk though about making money. Being a good person, boy, that's a terrible thing to say. I feel kind of bad that I just said that, but that is a truism. If you become too close and you take it outside of the business realm and you go into other realms, which we all do. We all do that. I absolutely do that. I will absolutely work with a young pilot who has no money. And that is something we believe in at our firm. You don't always have to make money in the short run. So anyway, you can't rent the property for 60 days. So the last renter moves out, the place is a mess, you got to redo everything. So you're going to lose 2 months of rent. That could be a reason why you don't make money. Tenant and landlord laws, very important to know the laws. If you have a tenant that won't leave and won't pay, depending on where you live, that could be a problem. So you need to be careful of that. So what are the ways to mitigate all these risks? Okay, you want to make money. I get that. There are some things you can do to mitigate risks. Number one is learn about real estate. Learn about, if you see something that doesn't look right, at least understand where the heating units are. I know when I first bought a house, I didn't know what a split unit was. Understand what that is. Understand what type of electricity you have. Understand all that stuff. And if you don't, bring somebody along that does. Understand cap rates. Again, I can buy the property for this. I can rent it for this. Find out what true rents are. If you buy a property and the person tells you I'm getting $2,000 a month, make sure that person got $2,000 a month for the last 12 months. Make sure that truly is the amount you can rent it for. There's also this 2% rule. There's many other rules too, but a 2% rule means if I buy a property for $200,000, I can get a monthly rent of $4,000. Now that's $48,000 a year. Yeah, I mean, probably that mitigates all the risks. I don't know how possible that is. It used to be called the 1% rule. So if you used to buy a property for $200,000, you could rent it for $2,000. In certain real estate markets right now, the rent versus buy is really in favor of buying. In certain markets, the rent versus buy is really in favor of renting. Understand that dynamic. So, all right. So I threw a lot at you. This is video number one, went way too long, but if you're still with me and you're still interested in rental real estate, this is the reason why rental real estate can be so good. It's because 5% of the people that go down this road actually end up buying and renting. Of those 5%, I don't know how many know what they're doing. I don't know how many have gotten lucky. But I do know if you make this a business, and this is something you really want to do, and you think it's going to have higher returns. We have some people that we've come across. They don't want to invest in stocks. If you don't want to invest in stocks, then real estate has a pretty high expected return if you do it right. So then again, it makes sense because in keeping money in the bank, the risk-free rate is 5.5. You could do rental real estate and make 8 to 10, 12% per year. It requires a little bit of work, but it's something that you absolutely can make money at. And if you go through this process and you look at all these things that I talked about, some miserable, some less miserable, you understand the tax benefits, you understand how to make money, then I wish you all the best in that endeavor. And we do have many clients, multiple groups of clients that have made good money, not just in single family rentals, but apartments, even small buildings. So it is absolutely something that you can do, but it takes a little bit of work. So anyway, thanks so much for watching. Video 2 will be about the tax benefits of rental real estate.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.